Hi guys, welcome back to this Money Control live stream. You're watching Earnings Express, and today we are decoding the numbers of TCS. The second quarter numbers have been declared just a short while ago, and let me just take you through the numbers. The profit has come in at 11,909 crore rupees, vis-a-vis expectations of 12%, vis-a-vis expectations of 24.7%. So yes, a margin miss. That's the earnings picture coming in from TCS. An order book as well. The deal TCV has come in at $8.6 billion, and it was expected to touch that $10 billion mark this quarter, given the fact that a lot of deal wins have come in from the retail sector and the likes of McDonald's, even Rolls-Royce for that matter. But let's decode the numbers then. So joining me to do that is Ashutosh Sharma, who's the head of Forrester Research India, as well as Nirav Karkera, head research at Fisdom. Great to have you on the show, gentlemen. Thanks a lot for joining in this evening. But I just read out the numbers. Nirav, coming to you first. Margin miss. That's what it's looking like. But what were the expectations that you were working with? And what is your first take?
So, Nandita, there was an expectation of pressure to be mounting heavily on the margins. It was largely expected on the back of a ramp up in, several key deals, heavyweight deals, especially, like the BSNL one, which, although the contract value is large, is not really margin accretive. In fact, on the flip side, it is expected to have a pressurizing impact on the margin. So any ramp up in some of these deals were expected to eat into the margins and pressurize the margins a little bit. On the other hand, there were expectations that some of this would be slightly offset by the deferment of wage hikes and furloughs towards the second half of the year. But very surprisingly, that did not come through. We are seeing the margins to remain under pressure, and I feel the element of disappointment remains on the margin. While there was a far expectation of it to be lower on the lower side, the results have come up to disappoint furthermore, and I feel. Some of it will also be attributed to increased, deployment onto the into the talent pool, into the hiring workforce. That will come up as the most probable reason for it. However, net
Hmm.
additions are also not as much as one would initially expect, for this kind of a margin. So there seems to be a slight slip between the cup and the lip over here, but I feel we'll have to take a closer look at it and see how does the coming quarter shape up in terms of net headcount addition, and how are the margins looking then, to make complete sense of it.
But do you think that the aspirational range of 26 to 28% that the company had outlined, would that be a tall task to to deliver on? Because we have the second half of FY25 to look at, and last quarter, the management had said that FY25 will be better than FY24.
Yeah, so it's not going to be an easy walk. I would say that it is, like you rightly said, it is an aspirational figure, and now it is looking all the more aspirational with the way life has developed since the past guidance. Right, it is not going to be easy at all. In fact, if they're able to move closer to the initially outlined target, it would come up as a positive surprise.
Hmm. Okay, that's the verdict from Nirav then. But Ashutosh, coming to you, are you as disappointed? And of course, the margin, aspirational margin of 26 to 28%, could be a tall task going forward. But given the fact that we had a 50 basis point, rate cut by the Fed, the jumbo rate cut, discretionary demand environment, do you think that will improve in the second half? What is your take, Ashutosh?
The passing of Sri Ratan Tata. So it's a big loss in the industry. Just wanted to put out there. But coming back to the TCS and the outlook, I'm not a margin person. I'm more of a top line person. So from my vantage point, I think we are seeing a ramp, an increase in terms of the way the numbers are going to perform in the coming quarters. So I am optimistic about it. Of course, it's a big hit on the margin. It'll have some impact. We were obviously everyone was expecting more, much more than the number showed up. I think it's probably a combination of various things, especially the rising headcount cost, and maybe there are some one-off expenses which I'm not aware of. But overall, I think from the revenue perspective, we are in a much better position compared to say we were in last, I would say 4 or 5, 6 quarters. And the part of the reason why that's the case is the overall uh, improvement in economies across the globe and specifically in North America that we are expecting. So coming back to the point that which sectors and where exactly the discretionary spending is going to come from, we have seen in the past some hits and misses with respect to financial services. The tech has been a fairly well-performing sector in the North America, but I think going forward we will see resurgence in some of the other core sectors of the economy as well, such as manufacturing and communication services, etc. So overall, given the fact that Fed has finally in September made a cut, and it's expected to cut further to some extent in both November and December. We expect this trend to continue, and that will lead to much higher discretionary spend as we go into 2025 calendar year. So, to your point earlier, yes, 2025 is likely to be a better year, not just for TCS, pretty much for the industry compared to 2024 for sure.
Just talking about the deal wins as well. The deal TCV, Ashutosh, has come in at $8.6 billion, which is slightly, better than last quarter, which was at $8.3 billion. But expectations were that it could touch $10 billion, given the fact that we saw quite a few deals coming in from the retail sector, right? But the company is also losing business or market share because of its large clients choosing to bring services in-house instead of outsourcing. How much of impact or how much of an impact would this have on contracts going forward? Do you think the deal environment will remain, in the same range, or do you think $10 billion could be, a reality maybe in the next quarter?
Yeah, given the overall increasing size of TCS and the fact that the discretionary spending will come back, we expect the deal volumes and size both to go up as we go into the next few quarters. Will it touch 10 billion in 2025 or maybe next year? That I cannot be sure of. But overall, the trajectory seems to be in that direction that we will see more demand coming from the clients. And as we get past this uncertainty that exists for next 3 or 4 months before the new government comes into the North America, and that happens to be the biggest market, even though the Europe also is going through some of its changes. We expect the deals to become, like I said, much bigger and likely to come in a bigger flow. So I won't be surprised if it reaches in 2025 itself, but three possibilities, or rather two possibilities, either 20 25 25 or 50 25 or 25 50, whichever way you take it. So it's certainly between 50 and 75 basis points is what we're looking at, assuming things stay in this direction. Fed is trying to balance both labor and inflation, and inflation seems to be under control. The bigger concern is going to be increasing the employment numbers. So I expect, again, I'm not an economist by any stretch of imagination, but going by the
Hmm.
numbers and the discussion that I'm seeing, I expect it to continue in that direction. And if that happens, obviously, then it sets us up for even further, hopefully, rate cuts in 2025 as well.
Right, Nirav, coming to you, post the first quarter numbers, where we where in which we went into with very few or very less expectations, and there we saw positive surprise. This time around, the expectations were slightly on the higher side, but I think the margin miss has come in as a negative surprise. We saw a lot of brokerages either upgrading the stock or the target prices here. Henceforth after the second quarter numbers, do you see the case for a downward revision in target prices, or any downgrades? How are you looking at it?
So there has indeed been some fair bit of disappointment here, but I don't really think it is that bad a disappointment that we will see brokerages immediately rush to downgrade on the stock, because there are a few levers that are at play for a structural re-rating on the positive side that has been going well in favor of TCS, right? So this quarter itself, the expectations were riding slightly low, and there was slightly a bit more disappointment. So most re-rating that we saw on the upside in the past couple of quarters was with a slightly more longer term perspective, right? So some of those levers still continue to be in force, be in play, as we can see that the interest rate regime in the West and the developed nations are now finally starting to ebb. Of course, I believe that the FOMC will trudge on the next rate cut slightly cautiously. Doesn't seem like they will be in too much of a hurry, nor they should be. Right, the percolation effects will first be accounted for, and we'll have to take a look at the rest of it. But this is a positive tailwind for the overall demand environment. If you look at the book, vendor consolidation remains a key theme. Generative AI and digital transformation projects continue to come in, healthy quantums to TCS. So TCS is expected to benefit from a lot of this. In fact, this time around, there was anyway a bit of pressure on the margins on the back of the BSNL project ramp up. But with that going out of the picture and hopes and expectations of some of these booked orders finally percolating into the P&L, we believe that TCS is structurally on a strong footing from a medium to longer term perspective, right? And most such the most such upgrades noted were also from a longer term. So they should not rush to reverse it. I believe the upgrades will sustain for a bit more longer, and there won't be as much a knee-jerk reaction as we are expecting at this moment.
All right, that's the view. Ashutosh, coming to you, of course, TCS and HCL Tech, they are yet to reverse the headcount trend, right? They saw headcount decline, but overall, how is the trend really looking? How is the trend really panning out in the hiring arena? Do you think things are better, or do you think it will remain this way and demand environment will remain tepid, going forward?
So, Nandita, on that front, there are two forces at work. One is, of course, like I said, the rising demand and the rising projects, which will lead to these organizations hire more, and it will happen with other providers as well, in addition to TCS. But on the other hand, we are seeing a significant impact of automation and artificial intelligence in the way these organizations are offering services. So, overall, I would expect the hiring to come up in next few quarters, at least this quarter and the further. So everyone will start hire more because the demand is rising. But in the medium to long run, I expect, because of the fact as AI kind of changes the way the services get delivered, all the metrics that we are used to so far with respect to the revenue per available resource, utilization, pyramid, ratios of all kind, on-site, offshore, and all that, everything is going to go for a change. But that's some time out. But I think you'll have to keep an eye on how that plays out over, say, 1 year or so. But in the interim, in the next few quarters, I expect the hiring to come back somewhat slightly.
Okay, and what about the how the geopolitical situation is really panning out? How much of an impact would that have? But because BFSI, it returned to growth last quarter. This quarter as well, it has improved a bit. Do you think the ongoing situation could pose a threat again?
You mean the situation in Middle East? Because there are
Yes.
multiple theaters right now that are going on. I think the most of the Middle East situation is likely to contain, just like the Russia Ukraine became sort of something that we got used to, unfortunately. But it's the way it is right now, and it did not expand beyond that theater. Likewise, Middle East, I expect it to remain within that region. So I do not expect these things to have even medium to long term impact on the geopolitics. However, they will continue to be a problem in those regions specifically. So having said that, I don't expect them to impact some of the major markets that these IT services providers or the economies essentially are. So be it North America, be it Eurozone, South America, or for that matter, broader Asia Pacific.
Ashutosh, last question to you really in terms of generative AI deals. I just want to read out a statement by the company in the press release. They're saying that they're seeing continued momentum in AI and generative AI adoption with the underlying technology getting maturity at a very rapid pace. And there are now 600 AI to generative AI engagements deployed successfully in production or in various phases of development. But most of these contracts were of short-term nature. So how do you think, or how scalable do you think AI is? When it comes to Indian companies, especially the likes of TCS, which declares revenues, right?
Right. So, see, it's like digital. So back in the day when digital had first come on board, majority of the organizations were figuring out what to make of it, right? And they were doing pilots, experimentation, and small initiatives in the beginning before it became a full-fledged transformation activity. AI is very similar. Right now, we are going through, or at least have gone through, one major phase of most organizations trying to do some sorts of pilots and experimentation. They have worked with primarily packaged AI, if you will, such as Microsoft, Google, or some other products that have embedded AI in their offerings. But as they become more comfortable with AI, they will uh, deploy and use them for various activities. Right now, it's mostly internal facing for things such as improving employee productivity, having some sort of assistants and agents which serve the internal workforce. But as organizations become more comfortable and have confidence in the outcome of what AI can do, and also do a lot of work internally to support and build those applications, that's when the demand is going to come to these services firms in terms of volume. So that's again a few quarters away. However, we are seeing the impact of that happening in the form of bigger data and analytics, data and insights types of projects that these organizations will undertake in the form of transforming an organization's landscape to support whatever AI implementation that they'll do in the future. So that's some time away. However, in the interim, the projects are likely to be very small, a chatbot here, a small insight, some there, some implementation in marketing, some content creation, some data document generation or analysis. So these will remain small for the foreseeable future, but we expect them to become big. And that's precisely why most of these organizations, be it TCS, Infosys, HCL, Wipro, everyone, they are building broader AI capabilities, which not only impact obviously the client-facing services, but they also have a significant implication on their own internal operations too. So that's the kind of, I think, the fundamental work that's going on. In fact, TCS also talked about the significant investment in talent and infrastructure. I'm assuming a major part of that went into building some of these AI fundamentals that they have to put together for their future services.
Right. Nirav, coming to you for the last question then. TCS IT Bellwether has set the trend. But of course, margin miss was led by one-off company-specific issues, right? But in terms of, guidance to look forward to when it comes to Infosys, would you expect an upward revision? Because last quarter, they had revised their guidance upward to 3 to 4%, right? But now we've had that Fed rate cut that we spoke about. So do you think there is a case for Infosys to revise guidance upwards, or do you expect negative surprises from the other large cap IT names as well?
I mean, it wouldn't be as much as a surprise if I would be expecting it already. So, but on the subject of Infi, I'm slightly a bit more upbeat. I would say I'm slightly more positive. I'm expecting the results to at least not disappoint. It would be largely in line with expectations to an upside. And like you rightly pointed out, the interest rate environment has changed, and after the summary of the FOMC being taken into consideration, the outlook seems robust. One can expect. Although not a significant, but a slight, upward revision in the estimates going ahead for Infi very specifically.
All right, that's the call then. Gentlemen, with that, we've come to the end of this coverage on TCS earnings. Would like to thank you guys for taking out time and joining in this evening. Have a great evening, and of course, look forward to interacting with you when other large cap companies also report their numbers.
Likewise,
Thank you,
looking
Nandita.
forward.
Thanks a lot. Well, with that, of course, we've come to the end of this edition of Earnings Express. TCS, there it was. The verdict is it's a margin miss for TCS in the second quarter. From me and the entire team that put this coverage together, thanks a lot for watching. Stay tuned to Money Control for all your other news and updates.